All right, welcome to Coffee with Marcus and Mark, the number one stock market show on Spotify and one of the most popular market updates on YouTube. In this show, we are going to talk to you about what's happening in the markets and how we are trading it. Today is Friday, December 16th, and gosh, stocks have fallen sharply. Yesterday, the Dow dropped 700 points, its worst day in 3 months. Why? What's happening? Because, well, yesterday retail sales came out, they were declining, and now everybody's worried about a recession because the Fed said that they're still planning on hiking interest rates through 2023. So now everybody is worried that this could cause more damage to the economy. So is this the end of the Santa Claus rally? We'll talk about this and also how we are trading the markets. There are a few stocks that popped up that are interesting candidates to trade. So we'll show you what we are considering trading. Anyhow, if this is your first time here, I'm Markus Heitkoetter. This super smart guy over there is my head coach, Markus. We're real traders who trade live accounts. So therefore, we got a lot of trading experience, and we're showing you how we trade these crazy markets. Trust me, we know our stuff, and we're not afraid to tell you like it is. So if you're looking for some honest insights into the fascinating world of trading, you are in the right place. And gosh, Mark, these markets are crazy. Here we go. I mean, S&P still falling.
It is, and you see that big reversal day a couple of days ago, four trading sessions ago. We finished positive that day, but then back-to-back losses, and it looks like today, unless things change, we'll have another losing day, and that will be 3 consecutive losses in the S&P. Traders, I guess, not looking to go long heading into the weekend after Powell's comments in the Fed.
Yeah, it's also super interesting. If you just look at it technically, I mean, right now we do see, let me bring up a horizontal line, that all sorts of support levels are broken to the
Yeah.
downside. And yeah, today is quadruple witching day. Quadruple witching day means that we have monthly options expiring, we have weekly options expiring, we have futures, the index futures contracts expiring, and the index futures options expiring. So a lot going on. And I saw that today, a record $2.6 trillion in options are expiring. So
Wow.
that could play a factor. And yes, the recession fears, I honestly think it's an overreaction. I think it is an overreaction. And if you look at it, let's take a look at a 10-year yield here. Because, I mean, the 10-year yield should rise sharply, right? Because the Fed just said, oh, our terminal rate will be at 5.1%.
Yeah.
That's not reflected in here. I don't see that.
It and that's the thing. It seems as though it's an overreaction just because I personally don't think that Powell really stated anything significantly different from what we knew before. Right? I mean, he did say that the terminal rate is expected to be a little higher than what it was previously, but even traders are kind of discounting those comments, thinking, yeah, but probably not, at least based on Fed funds futures. There you have it.
Yeah, so
So
traders
the
are more factoring in the 4.8%. And you see, the 10-year yield, that was peaking at around what, 4.3, when
sure.
everybody was talking about 4.7 at the terminal rate. So right now that it's going higher. So I kind of feel that there is somewhat a disconnect right now going on in the markets. We talked about it in the training this morning that also the VIX, if you look at the VIX, the fear gauge, I mean, this is not reflecting the drop that we are seeing here right now in the indices.
No, it's been kind of muted, and sure, it's up a little bit today, but I think that the easiest thing to do when you're looking at the VIX is to take ranges into consideration, and you have the extremes to the downside, extremes to the upside, and we're near the lower end of this range, and even the last couple of days, we're kind of smack dab right in between it, even though the markets are down over a percent today.
Yeah. So this morning, I mean, we looked at the index futures, and here we are seeing the E-mini Nasdaq. And at first, it looked like after the European session, we were coming off the lows, and right after the open, it looked like the Nasdaq was trying a rebound here, and that's honestly
Yeah.
what I would expect today. But hey, with the quadruple witching, a lot of volatility will be in the market today.
Yeah, and the so on a quadruple witching, the significance there is that you have expiring options, right? And so if a trader needs to maintain that position, then you're buying back the option and selling the next one, or vice versa, depending on the position that you have going into the expiration. And so this does create some volume. It can create a little extra volatility. But you know what, Marcus? When I really did a deep dive into this and looked into it, I decided or determined that it really didn't affect my style of trading, and I doubt it really affects yours. So, is this significant? I don't know. I don't know.
No, so we will see. I mean, after this attempted rebound, we were making session lows. We're still trading towards session lows. I still believe that we will see a little bit of a rebound here going into the close, but right now it's looking fairly grim. I mean, surprisingly, today the Dow or the S&P actually leading the pack down 1.3%. Both the Dow and the Nasdaq down around 1.1%, and we'll see where we stand by the end of the day.
Yeah, pretty big reversal during the week. It looks like right now we'd be down 2.3% if we closed here. And that would be a back-to-back losing week. We haven't seen that since September.
Yeah. So if you look at a weekly chart, that's where we stand. So I mean, on the weekly chart, we still see that this downtrend is intact, right? I mean, this is where we see a downtrend, and that's where we said we were trying to break through this. We were looking at the 200-day moving average, just some other technicals here on a daily chart, and this for the Nasdaq. But if you're looking at the S&P, we see that it acted as a resistance again.
It it has, and this is something specific to the wheel strategy that we like to trade. I've had this conversation with our mastermind members really all year long. Don't force a trade, right? We see time and time again until the markets tell us something different. When we start to get this rally, traders sometimes feel like they're missing out. They have to sell puts, they have to force a trade. Just wait, and you could get those strikes in the trades that you want. We've seen that time and time again this year until traders are buying the dip consistently and we see a clear uptrend. Don't force anything, wait, and it will come to you.
Yeah, and we'll talk about our positions here in just a moment, and also the trades that are possible right now, the trades that popped up. But I want to talk about two individual stocks. One, a big surprise. Meta today bucking the trend. Earlier up more than 6%, still up 4%. Did you see that?
I did, and I heard that J.P. Morgan upgraded Meta from overweight or to overweight, excuse me, from neutral. So I guess traders liking that news.
Yeah, I don't see that, to be honest. I don't see this. I don't see their new business model, the multiverse, virtual reality. I mean, I don't see this. So we'll see how long this lasts. But right now, as I said, traders are excited about this. And then Tesla still sliding. Yesterday, a little bit of an update on an overall down market, but today down again 4%. 3.5% right now after news that Elon Musk sold more shares.
Why is he doing that? I wonder.
Yeah, right. Need to finance a Twitter deal or something like this.
uh,
There's
yeah,
a lot of
making
controversy going on.
making lows not seen since November of 2020.
Oh, that is a long time ago. Yeah. All right, let's take a look at our positions, and then also, I mean, if you guys want, look at some potential trades that you could take. So Google today also a little bit down, less than the market. So Google is holding up down 0.8%. Right now, not much to do for us. I'm assigned at 108. You're assigned at 104. So we cannot sell calls here. We have to wait until we pop higher. For you, probably around 100. For me, closer to 103 possibly. So, but not much to do here.
Nope.
Okay. NVIDIA. Gosh, I mean, what a difference a few days make. So this is where originally I was assigned at 195, flew a rescue mission. My new cost basis at 160.91. And I was able to sell calls several times over the last few weeks. never got called away. In the beginning of the week, it looked like I would get called away this week, but then a huge reversal here. So if you look from the high to down here, that is a 12% reversal in NVIDIA. So these calls are expiring today, and right now it seems that they're expiring today. I will still be in the position, which I'm okay with. I can sell more calls next week. As long as I'm selling calls above my cost basis, I'm fine. So I have many options here. I can next week sell the 165 calls, the 170 calls, 175. We'll see. This is where I'll use the calculator on Monday and then decide what calls I want to sell. And unless we see a huge reversal today in rally, I think these will expire worthless.
So did you look at possibly rolling, or did you decide that that's not something you want to do?
I was looking at rolling earlier, and there's just not enough premium in there right now. I do believe that Nvidia would have to be closer to the strike price, so probably around 170, 172 before there's enough premium in there to roll it. So I probably just let it expire, wait for a rebound next week. Because I mean, we know that no market, no stock is just going straight down. There's always a little bit of rebound, and if you don't see it today, I believe we will see it next week, and then I'll sell some more calls again.
Sure. Yeah, I mean, we didn't even talk about it, but looking at the options premium, it looks like there's some decent premium at the 170 strike. Rolling out to 175 again doesn't really make sense. But I'm with you. You had that reversal day and, 3 consecutive down days if we finish lower today, which really seems like a done deal. So maybe you get a nice bounce on Monday and you get some fat premiums at the
And
175 again.
And you see, NVIDIA typically moves 3 times the speed of the market. So if, let's say, on Monday, we just have a regular update where the NASDAQ is maybe up 1.5%, which is very normal, this would translate into a 5% move for NVIDIA. So this means that NVIDIA could, on Monday, already be above 170. And then I can sell the 175 again. So
Yep.
again, this where also today we see that overall the markets, if we go back here, we see that the Nasdaq right now is down 1.3%, Nvidia down 2.4%. So holding up a little bit stronger. Typically, Nvidia is moving at 2 to 3 times. I would say, Robert, or probably 3 times whatever the Nasdaq does. All right, play. That's another one that expires today. I sold the 32 puts. You sold the 31 puts. For me, at this point, it doesn't make sense to close this trade early. I just let this expire because it's possible that we are moving below 32, but very unlikely. And for you, 31, even less likely.
Yeah, I did the same thing. I took my 90% order off, which is my plan, let it expire worthless today. If there was something that looked outstanding, I could close it to free up the buying power to put on another trade. But at this point, don't need to do that.
Yeah, and we'll talk about possible trades and also what we are planning to do here. CTRA, another one that is an energy stock. Yesterday, bucking the trend, and even though the
Yeah.
markets were going down, moving higher. Today, moving lower. So this is where we sold the 26 put expiring last week. We got assigned at 26. So right now, slightly down here on this position. We were able to sell also the 26 call that is expiring today, and it will expire worthless. So that's more premium that we can keep. If we see a bounce back here, then we can sell more calls, and that's what we are looking for in CTRA right now.
Exactly.
All right. Well, let's talk about a trade that I think was very, very interesting this morning, and this is Apple. So Apple popped up, and right now, a possibility of selling the 130 strike. And I think this is a really, really good trade. That is for next week, December 23rd, and you get some decent premium there. And we see these are the lows that Apple made in January.
Yeah,
Or is it
not
June? Oh,
not
sorry, it's June. Yeah, never mind.
not too bad, not too bad. And I so it looks like right now 130 you get 34%, 131 you get 42%. Even the 129 it's below 30% right now, but that could be popping up a little bit uh, in the future here if we drop a little more. So I like it up too. It's just correlated to the positions that I'm already in.
That's it. So let's take a look at the correlation. And this is why right now for us, let me just correct this. So I'm in Google, NVIDIA, CTRA. I am also in Play. And then let's just add Apple at the very end here. So this is where we see that Apple is very highly correlated to Google and NVIDIA. And that's why right now I'm not willing to triple down on tech stocks here. I already have these two tech stocks. And I mean, everything else, CTRA, not very much correlated to Google, NVIDIA, Play, not very much correlated. My cutoff here is a correlation of 0.65. So I'm very happy with these. And then Apple, for us, it wouldn't make sense at all.
Agreed.
Okay. Now we have to do one more thing here, and this is we gotta talk about our bet and the Santa Claus rally, because my bet is that we are ending above 4,200 by the end of the year. Now, the beginning of the week, it looked really, really good. I made this bet with you and also two of our mastermind members in October when we had our live boardroom in Cayman Island. This is where I said by the end of the year, we will be above 4,200. I really, really, really need a Santa Claus rally for this to kick in. So let's talk about what is a Santa Claus rally?
Well, Marcus, the term is kind of tossed around loosely, and many times, I mean, we've been guilty of it as well, just tossing out the idea of a Santa Claus rally in December. But technically speaking, it's defined as the last 5 trading days of the year and the first 2 trading days of the new year. And there's no real clear reason for why this happens. It could be that people are optimistic during the holidays, that they have some bonus money or maybe some money they want to put in their retirement accounts and then start buying stocks again, or maybe optimistic about retail sales during the holiday. Whatever the reason, though, it actually shows and is proven that the market tends to outperform during this period. You see there, up an average of 1.3% over those 7 days, going back to 1950. Now, this actually is pretty statistically significant because during all other 7-day periods going back to 1950, the returns on average are 0.24%. So what's that? 5 times the typical return of a 7-day period.
Yeah.
Now, Marcus, even if we get a Santa Claus rally, though, this isn't looking good for you because you
It's
need to
not
be
enough.
about 9%.
Yeah, I mean, at this point, the markets really need to rally, and they need to rally. What did you say, 9%? I mean, in the
Yeah.
beginning of the week, it looked good. They just had to rally another, what, 3 or 4%. That was possible with this slide. I think I need to start shopping for steaks for you. I mean, again, the year's not over, but right now the odds are not in my favor at all. So we
It's
shall
been
see.
a
Anyhow, there's
fun.
still opportunities, as you can see. So today we found a few trades, and hope that you enjoyed this. You had something else, Mark?
I was just gonna say it's been a fun bet, and actually, I think it was an impressive call way back then, and we actually made a nice run towards that level. So if it wasn't
Blame
for
Powell.
Powell, you might have some stakes on your end.
He's the Grinch. He's the Grinch who stole the Santa Claus rally. Hey, talking about Santa Claus rally, I actually did a whole video on the Santa Claus rally. I'll link to it right here. Take a look at this. It's pretty interesting. So we just glanced at it, but take a look at the Santa Claus rally. And then we'll see you again next week. Have a great weekend.
Happy trading, everybody.